Good morning, traders. This is Perry Wilkie with StartUpTrading.com. It is 9 minutes till 9 a.m. Eastern Time on Wednesday, October 16th. So, looking back at yesterday's session, it was flat for the Russell, a little bit, up and down, but right back to where it closed the previous day. Looking at the Dow and the ES, they are both down 0.75% basically, with the NASDAQ being down 1.3%. And if we look at really the structure uh, of these, we did a lot of repair yesterday. We didn't get do anything really for the ES, so those targets are still below on further weakness. But for the Dow, we cleaned up the single prints that were left from Monday's session on yesterday's session, which was Tuesday. For the Nasdaq, same thing. We cleaned up the poor structure, and we were just right down there, uh, at it. So in the overnight session, we basically stayed lower. If we look at what that did to structure, we have some huge single prints on the Nasdaq, two big blocks above from that liquidation. So uh, all things being equal, it should take it a few sessions to get back above there if it does not start just one time framing lower. And we'll get into why, what we're going to look at on that in a second here. But if you look at the ES had, those two bigger blocks similar to the Nasdaq, same candles, but then it also had further weakness, right? The ES was weaker than the Nasdaq yesterday, structurally speaking, and uh, maybe it was just playing catch up. But if you look at the grand scheme of things, they both just basically rotated down to you know those lower prices and filled. And if we look at the Dow, you know, so on weakness, right, we've got a little bit left of cleanup for the Dow down here that's relatively short, order distance away, and the same for the ES. There's really not a lot. We'll get into, where the markers are that are really below, I don't believe. Uh, Looking at, what's on tap for today, the title of my video is VIX Expiration Wednesday. Normally, especially on OPEX week, which this is. So this is a normal flow for expiration week. Uh, Normally this will open up volatility. We didn't really, although yesterday seemed like we had range expansion and volatility to the downside, right, and then just a flag and go sideways. We really didn't have any volatility. So uh, we could end up with some enhanced volatility, the rest of the week, starting from, this morning session on into Friday. And, you might want to consider adjusting your size uh, the rest of this week, going and probably, reevaluate it on next Tuesday, see how Monday's session goes. But for the next 3 to 4 sessions, expect to have increasing volatility. It will rear its ugly head at some point in time, and we'll just have to go from there. Don't get lulled into sleep. That's what happens, when we have the decrease in volatility, traders expand out their range and their size and their contracts. And then when volatility starts expanding out, they don't, aren't aware that it's going to happen. And then that's when you know, it's the the best and the worst, right? You either really make out on your good trades, or you really get your ass kicked on your bad trades. And we, a bad trade isn't necessarily a bad trade unless it's a not a trade you shouldn't have been in, but you're going to lose more than you should, I guess is what I'm saying, on your trades that don't work out in expanded volatility. So as we look at, what's on deck for the rest of the week, uh, we're going to have EC, B is going to come out tomorrow, so that could move some tape around, and we're going to have retail sales. So from 8:15 to 8:45, 9:15, right in there's the news flow that's really for tomorrow, and then Friday is just OPEX. As far as earnings go, there's Netflix tomorrow after the bell. That's the one you need to be aware of. If we look at positioning real quick, the Qs closed at basically just under 480 last night. We're basically trading 480 right now. Uh, I'm sorry, I'm looking at the wrong thing. The Qs basically closed at 490 85 yesterday. We're trading 491.20, so up just like 25 30 cents. Right here is where we are. So you can see that you've got a little bit of an area between 491 and 492, and then 490 is your break point, and then 489 to 490 is your area of potential support, but then it just really cascades down to uh, potentially all the way down to 485 and 484. Looking at that, so now we can get into my dyslexic self. And when I was looking at uh, the SPY closed yesterday at 580, and we're basically trading 580 right now. So there's not a lot to be gleaned from looking at positioning for today. We've got really nothing between 585 and 590 the way the contracts were written out and what was available, and then because of the way they price certain options, and then as we slide down, again, there's just really nothing here. And if you look out for the week, uh, the major support's not until you get to 550. That would be a major drop from where we are at this point in time. Looking at the cash market, you've got 58.45 to 58.50 for today, and on the upside, and 58.90 to 50. I'm sorry, 57.90 to 57.85. I guess I need some more coffee here or something. Uh, we closed at 58.15 yesterday. We are basically unchanged right now, so we are a little bit closer to the support, but keep in mind the support isn't really at 5,800 for today. It's just a little bit under there. It's about 10 to 15 points under 5,800 on the cash market. I'm talking cash here, the SPX, and then right at that 58.45, 58.50 uh, above. So those are your markers that we could, kind of trade below there is, that would be normal flow for today. Anything between those would be perfectly normal, which we are between them. Getting below or above is going to be what takes something special to happen, right? So getting below, especially with expanded volatility day, if we get below this 57.85 and the VIX is one time framing higher on highs of the day, that's when you could get an explosive move to the downside. Otherwise, you're just going to stay between these two bands more than likely. As we look at where we're at, we went up, right? We come all the way back down, same spot, and we're just hanging out right on these this lower distribution. But if you take away these two bars, right, just forget that they even traded, and just imagine that they were blanked out and you didn't know what happened those days. The data's gone, and you were to look at everything leading up to before then to now. It looks perfectly normal, right? That we're low range, sitting here just melting higher. So potentially all that happened is we got a little bit ahead of ourselves, right? And then we come back down until we start trading. Uh, I would say you really have to get below 57.88 half. Have to get below this point of control to really start getting something deeper on the tape. So you could get obviously some retracement back up to yesterday. Uh, this 2-day range here. Uh, 58.85 is your point of control basically from yesterday. So watch to see on strength this morning if we can print that and stay above it. But if not, you could just kind of back and fill down here. You could uh, just go down a little bit lower. I'm expecting not much out of today's session, even though there's a potential for expanded range volatility. I'll believe it when I see him. I am going to cut my size though. And the reason for my skepticism that we're going to get anything deeper on the pullback is the lack of follow through in the overnight session. The rest of the world did not care what happened yesterday. That we had basically this up and down move. No one gave a shit. So as we look where we're at, we basically come back yesterday into this 20,251, which is major support for the NASDAQ. And you just kind of hung out here. So you've got to get below that. You've really got to take out yesterday's low and stay below it. So that's going to be your bogey line is yesterday's low. And I would say it's probably just going to be a scalp if on the first test below there for shorts, but getting back up above and into range uh, above yesterday's low if we do drop below, and there's no guarantee that we'll even test below yesterday's low today. Uh, but getting back above and into range should be a scalp back up to the upside, and then you have to really see if you can start making progress over 20,441. That would be about 80 points higher than we're currently trading. And the same for the ES. It's got a little bit more to go, but 58.20 quarter is really where support should come in down to 57.94 uh, is what I'm looking at. Overnight session, right? And this is what I mean about I'm not thinking that it's going to be all that to the downside because it looks just like, if you, like I said, you take them 2 days out, it looks like nothing really happened yesterday and the day before. It was good for us day traders, but not in the grand scheme of things, nothing's really changed. 15 and a quarter points in the overnight session, very muted, right? We're holding, around these single prints. Um, I think it's going to take a lot of. I did see that there was some volume yesterday, and I could open back up the sheet and see, uh, what it had. But I know that the previous three sessions there was absolutely no volume on the tape, right? So let me double check yesterday's volume here. I did see someone on the Twitter sphere uh, tweeting this, but I did not really. Guess it's not going to let me open it. Let me try again. There we go. So we did get over 1 million contracts yesterday. So it looks like average volume to me on the futures. Now all the stocks, I'm not monitoring the main flow on the New York Stock Exchange anymore to see what was there. But this would be normal volume. But I can tell you that the previous 3 days were some of the lightest that we've had in the last 5 months. So to me, you had, and they were making, their point was that you're up on highs with heavy volume. Well, to me, the heavy volume was on the sell day, so they were saying it's confirming the up move. Uh, but we'll have to see. That was their theory. I think they're misreading the data, but it could be me. But I just want that word of caution that if you saw any of that information coming out, I don't think that they were looking at stuff right. Uh, but so as we come out here, uh, to this again, we're at that pivot line, so uh, I think it's just a little bit easier just to watch structure. If you're playing the Russell, it has a potential to make a second and third day up to where because if you look at yesterday, right, we had an up day Monday, we had a neutral day really for the Russell yesterday. So you could get range expansion to upside. If it can take out and start trading above, and get back up towards Monday's high, that's really what you want to watch as far as everything that was going on. with it to see if it can start doing something else. Uh, and the Dow, I'm not a fan of really watching any. There's nothing really going on with a Dow that makes me want to even look at it. So, looking at these two, let's just watch this action. I think it'll be fairly easy to at least test this 58.73 on the ES today, and then potentially this point of control to see if we can take it out. And then you can see that we get up towards a split. Let's just call it 58.89, 58.88, right in there. That's going to be your real bogey, I think. That's where the decision is going to be made, whether you want to roll back over or if you want to, start going up through these single prints up here. What would be picture perfect is if you could come back down here and trade at some point today, 58.34 quarter, take out these single prints here for today, and then start a reversal period after that happens. I think that's going to happen sometime in the next few days. We'll just have to see what happens first. We, start taking a run at these areas. So if you come back down here early in the day and by, let's just say, by 1 o'clock, you're back up above value area high in the settlement and you're green on the day, you should probably start targeting these single prints up here. However, if you fail at the point of control and you roll over from the point of control, you're probably going to these single prints and below. And I just noticed I'm really long-winded today because I guess I'm still half asleep. So my apologies. So we will, pick it up from there. But I guess what I'm trying to say is I'm not expecting any trend to last more than 90 minutes. I'm not expecting any continuation. I'm not expecting you to be able to, buy pullbacks or do retracements. Just look at the top of the bottom of the range that's established in the first 90 minutes. And unless you can start, maintaining outside of that first 90-minute range, uh, and trending from it, right? If you see a pullback that's buyable or sellable, depending on which way we're going in that first 90-minute range, that's the only way you're going to get continuation. And I just don't think you're going to get it today, but we will find out. I expect more range in the choppiness that is because of the VIX expiration, though. Have a good